Hello, everybody. So, in this video, I'm going to discuss a topic called responsibility accounting. This is one of the most important topics when it comes to management accounting in ACCA. So, let's dive into it. So, responsibility accounting has around four centers. I'm sorry, there are around four centers, and each center has a responsibility. We would discuss each and every center with a few examples and make it easy for you to understand. All right. Firstly, what is responsibility accounting? Okay. Responsibility accounting is a way in which you can identify specific parts of businesses and you can assign a single manager who can be responsible for that part's performance. Okay. So think of it like a puzzle. Okay. Where each piece will represent a different part of a business and each manager is responsible for their own puzzle piece. Okay. Now, the first center that we're going to discuss about is the cost center. All right. What is the cost center? This is a part of a business where costs are collected. All right. But in this particular center, you cannot collect revenues or incomes or investments or profits. It's only and only related to costs. Think of a purchasing department or like a mixing department in a painting, like a paint manufacturing plant. Okay. The manager is only and only solely responsible for controlling costs and nothing else. Okay. Uh, in a cost center, one of the departments could be a purchasing department. Okay. So a purchasing department is responsible for what? It is responsible for buying raw materials for the company. Now, the manager's performance will be evaluated based on how well they are controlling these costs and not how much revenue they generate. They have nothing to do with revenue and profits. They're only responsible and known for how they're dealing with the costs of the business and all the departments which are included in the cost center. All right. So this is about cost center. Talking about the next center, which is the revenue center. All right. So what could you say about revenue center? Now, this is a part of a business which earns sales revenue. Correct? This is only responsible for incomes, revenue, right? It does not incur any costs. It is not responsible or accountable or known for any kind of cost related activities, right? Think of this like a retail outlet or a, say, like a sales department. Now, the manager is only responsible here for generating the outlet's revenue, how you're selling the products or how you're selling the services. Okay. You could also take up an example where a sales team is responsible for selling a company's product. Obviously, now the manager's performance is evaluated on the basis of how much revenue they are generating and not how they're controlling their costs. In the above example, we saw that they are getting bonuses, they are getting awarded, they are being responsible or held responsible and accountable only related to the part where they're allocating costs. But here, this is only related to revenue. Revenue would not look into costs, costs would not look into revenue. Is that clear? Now, the third center that we could talk about is an investment center. Yeah. Now, what is an investment center? Okay. This is a part of a business which deals with all investment related activities. It's very similar to a profit center, which I would discuss in the next point. But the manager here is also responsible for making new capital investments. anything where you have to put money in, or where your money is, or somebody else's money is invested in your business. All of that. Who looks into all of that? Investment centers and all the departments under this. Think of this as a subsidiary company. Okay, the manager is responsible for both profit and investment. Because why? When will you make an investment? When you earn some kind of profit, it is somehow indirectly also controlling your costs and your revenue, because you incur a cost, you make a revenue, right? Out of the revenue, if your revenue outweighs your costs, you will make a profit. And that particular profit is invested. You make decisions based on that profit, that what am I going to do out of the money that I have earned as profit. So investment center is indirectly a profit center related activity zone as well, a revenue center as well as a cost center as well. So a subsidiary company is responsible for its own profit and losses, as well as making investments in new projects. The manager's performance will be evaluated on the basis of what? Now, there are certain metrics that you could use for investment centers to calculate and to understand the workings of an investment center and the departments under it. One of those could be ROI, which is your return on investment. If you heard about it, it's called the ROI. And one of them is ROCE, which is your return on capital employed. This too would be discussed in one of the further videos. But for now, you just need to understand that these are the two metrics that could be used to understand the working of an investment center. Last but not the least is your profit center. What is profit? Profit is mainly profit is equal to revenue minus your costs. Anything in excess of your costs that you're making, okay, that exceeds the amount, is your profit, right? So indirectly, in a profit center, your revenue and your cost responsibility also falls onto a profit center, correct? This is a part of business that earns revenues and incurs costs. Like, think of a branch of a company. The manager is responsible for both over here. It's not just the profit, okay? If the company is making loss, it is still responsible. If the company has not managed its costs properly, profit center is still responsible. If the revenue has decreased, profit center is still responsible. All right. A branch manager is responsible for both generating revenue and controlling the costs. Their performance is evaluated based on the profit and loss statement. If it makes a profit, okay, you're rewarded. If you make a loss, you have to bear the consequences. So, in simple words, understand, cost center deals with only and only costs. Revenue center deals with only and only revenue. Profit center deals with revenue and costs. Investment center deals with costs, revenue, and profit. Very easy to understand. These are the four centers in every organization. And this comes under the heading responsibility accounting. Who is responsible for what kind of activities that take place in a business? Okay. Now, there are some key points to remember. Just hear me out. Only costs, revenue, and capital employed that are actually controlled by the manager should be included when calculating performance measures. Performance can be judged using the metrics ROI and ROCE. There's one more metric that you could use, that is your residual income. This is something which is also which would be required in your further papers, but we would get into this in a separate video again. But for now, you need to remember these three. Okay, these are the metrics, financial metrics used to calculate any kind of workings and calculations that fall under investment center. Responsibility accounting helps to identify areas of the business that need any kind of improvement and holds the management accountable for their performance. Okay, now I hope that this video helped you. Let me know that if you have any queries, any doubts in the comments below, and if you need any kind of further clarification. Thank you for watching. Stay tuned for further videos.